Well, ladies and gentlemen, before you skip this intro, I do have a big announcement to make. If this video can reach 1,000 likes, I'm going to take 3 of you to put you into my paid mentorship program for 2 weeks. That program includes pre-market analysis, post-market analysis, daily watch list creation, narrowing down that watch list before the New York session, as well as looking at your personal current trades and past trades to help you really focus in on your trading. There's also weekly homeworks that we go through daily, and those homeworks are going to really help you to hone in your trading skills. The largest aha moments that I ever had when I started trading this strategy was that these 3 things can be traded completely different. And I've shown this slide before, but it is huge. It is massively important to your understanding of this style of trading. 3-day setups using signal days. Okay, there's other different kinds of 3-day setups, but using signal days, these 3 days, previous days, high and low, inside day, first red day, first green day, those can be traded completely separate. The weekly template can also be traded completely separate. And then the 3-day cycle as well can all be traded completely separate from one another. All 3 of these things can also be mashed together to give one big trading strategy, which is the overall trading strategy. Within each individual piece, you have the parabolic trend trades, the short squeeze, the long squeeze, and some other different variations of market presentation that can help you get into the trade. For example, let's say you have a first red day, and that first red day is just a first red day. They've had a pump day, they've had the following day close below the open, and then you're on the current trading day. Well, how do I look to get into the market? Well, maybe it's presenting as a capitulation style of trend trade. So I'm going to take you on a little bit of a journey through this weekly template, except I'm going to mash together all 3 styles. I'm going to put them all together into one simple to use strategy for you to only have to really take 2 trades per week if they present. So every single week, Monday will create a high and low. That is something that is constant. It is always going to happen every single week. Monday will trade, and then by the end of Monday, it'll close. And the very highest point within Monday and the very lowest point within Monday is your opening range high and your opening range low. On Tuesday, you can either extend that range to one side, you can extend it to both sides, or it can just trade completely in the middle. And that will create your initial balance high and low. If they extend to both sides, you just remark off those levels as initial balance high and low. But now I'm going to show you how you actually use that. It's cool, they've created this little range, but what on earth does it mean? How in the world do I make trading decisions based off of that? 3 levels of rise and fall. What this is simply a check in the box. You want to measure from the highest point or the lowest point, depending on the direction of the market's travel. You can see that Monday has opened up down here, traded higher, and then has traveled back down. Okay, so from the high of the week down to the current low of the week is 300 pips. This is West Texas oil on the 30-minute chart. This instance, this is 3 levels of 100 pips. Almost perfectly from high to low. And you're gonna find that that gives you a lot of times a good strike zone for your trades. Here's another example of that West Texas chart. Measuring from high of week down to low of week down to the initial balance low is 300 pips, like I said, 3 levels of drop. And there's this low bear candle in which acted as support, the low bear candle simply being the candle that was engulfed within the W at the low of the week. This is where things begin to get a bit more fun because you get to identify coming into Wednesday and coming into Friday what the weekly template could look like. Using the opening range and initial balance, depending on how the weekly template is set up based off those first 2 days, is going to show you how you're going to trade on Wednesday. The presentation that you are searching for is the short squeeze pattern, the long squeeze pattern, or a parabolic trend pattern. That can occur on Wednesday and that can occur on Friday. Now, when we're thinking about the weekly template or just the week in general, it can only do 3 things. It can either go up and reverse, something like that. Of course, this could be flipped over. It could go down and reverse, or it could stay in a trading range all week long. Maybe that could be an inside week, something like that from the previous week, right? They don't hit the previous week's high the whole week. We just stay trading in a trading range. Or the market could just trend the entire week. Break out, pull back, and trend the whole week. These are the only three examples, the only three things that the market is going to do within that weekly candle, that weekly bar. Now, these are not cherry-picked charts. I've just gone back to the previous week, the week that just traded, and I'm going to go through a few pairs. This is gold. Notice on Tuesday we have a breakout that fails at the low of the current week. This is day one, 3-day cycle. On day two of the 3-day cycle, there's only a few things that can happen. It can either stay in a trading range, which would be just an inside day, or it can turn into a first red day, first green day, or it can turn into a trending day. Generally, I will look for a trending day on day two of the 3-day cycle. And if you combine with the weekly template, we have Monday, which was the opening range, and we have an opening range breakout. Okay, so opening range high, and this is a breakout of that range. Okay, so now we have our initial balance high on Tuesday. On Wednesday, the day that I am looking to take these weekly template style of trades, I am looking for a low of day trade based off of its day two in the 3-day cycle. I'm looking for a parabolic or short squeeze opportunity based off of the fact that it's day two in the 3-day cycle. And I'm looking for a peak formation low, a peak formation high, and preferably a parabolic trend trade style of trade based off of the 3-day cycle and the weekly template. In this example from last week, we have peak formation low, peak formation high, consolidation on the inside. That is the equation for parabolic trend trade. I also want a parabolic channel, a manipulation of that channel just prior to going vertical, which you do get on a smaller time frame, and of course this explosion out of the peak formations. This trade also began at the low bear candle down here at the low of the current day back from Asia. They worked that low. This is an ascending triangle. They break out, starts to work its way up. 8 o'clock, it goes vertical, rips back down to the downside in one bar, and then you get the channel on a smaller time frame, and it rips to the upside. So this is perfect. This is perfect Wednesday behavior. Now, of course, you can also get midweek reversals on Wednesday. The reversal actually came on Friday, which is the other day that you look for these weekly template style of trades. Coming back to the 3-day cycle, we have day one on Tuesday, day two on Wednesday, which is the parabolic trend trade opportunity. Then on Thursday, you have day three. They've blown off in the direction of the trend. Day three blows off the direction of the trend and does not reverse. That means that day three becomes day one in the 3-day cycle, with the understanding that this level is very important for trapped volume. If volume gets trapped above this level, and then we have some kind of break in market structure to the downside, this could be 3 days of longs trapped in the market. We have 3 pushes in the market looking at the breakout of the opening range. And this is exactly what you want to see for these reversals, okay? Take note of that. This is what you want to see for reversals. A breakout of the opening range followed by 3 pushes. That's like criteria number 1. 1 push, 2 push, and this is now the 3rd push out of the opening range. A consolidation at the high of the week. Step number 2, consolidation at the high of the week. Step number 3, I need market structure to confirm that the market is ready to go down. It is not just blindly saying, hey, this is going to go down because we've had 3 pushes and a consolidation, because it could consolidate and then rip to the upside. So you need to be aware of every scenario. All right, next step is break in market structure. So we have this low right here, a higher high formed, and then a lower low formed over here. So that is my green light that this trade might be taking place. In this pullback, 9 o'clock is right here, 9:15, and 9:30, which is the equity market open of the New York session. There's a great entry on the smaller time frame for a range expansion opportunity on Friday. To recap, 3 pushes out of the opening range, consolidation at the higher low of the current week, market structure confirming, break in market structure to the downside. Then that's the first mouse. This is the first mouse, that break in structure. Then you want to see your pullback. You want to be in your current session, the session that you personally trade, and you want, again, on the lower time frame for things to confirm a M just above, and they break down right at 9:30. If we were to use the time method, this was the 9:30 candle up top. And let's see if there's anything else that we could use to get us into the market. Where's 9:15? Right there. There's 9:15. Look what candle gets engulfed. They never come back. It just rips to the downside. These people up here are trapped going long, back up into the retest of the consolidation. And that's a perfect entry out of that consolidation for you to get into the market. This is the US 30 on the 15-minute chart. Again, the past week that just traded. And you see, this is Monday right here. I've got my opening range high, opening range low, and we have 3 subsequent pushes out of the opening range. 1 push, 2 push, and 3 push. First things first, I want to measure from the high of the week down. We have 450 pips. That is 3 levels of 150 pips of drop. Check that box. We've got 3 levels of drop. Now, let's zoom in on Wednesday and take a look. Let's look at timing of things. They make a lower low, okay? So lower low is the formula for the pump and dump. Lower low, look for 3 pushes. This is a break of structure compared to a break in structure. In structure being we're going down, they broke structure to the upside. That would be a break in structure, letting us know, hey, the market is out of whack and we're looking to go a different direction. A break of structure is the equation to let you know there might be a pump and dump opportunity because you're looking for the pullback. This is the pullback. There's 1 push and then a 1, 2, 3. So 1 push, 2 pushes, and then a 1, 2, 3, and an M, and it breaks down. All right, so there was a pump and dump opportunity on Wednesday, peak formation low, peak formation high. We have a consolidation just above that low. Look, the little channel. All right, so this is a capitulation style of trend trade on Wednesday. They break out of this range. Now we could take our range expansion tool, something like this, to find potential targets, and it made it almost perfectly to that target. Now let's go take a look at Friday, because this was day 1 3-day cycle, day 2, day 3. We do have a reversal on day 3 like such. Day 1, day 2 of the 3-day cycle on Thursday. This was also a first green day. They traded lower after that 3rd push, broke structure to the upside, which lets us know, hey, the market might be ready to go back up or change direction. That is break in structure. Then at the very end of the day, they give a very beautiful peak formation high, peak formation low, and then a consolidation on the inside with ascending support. And it also gives this nice little channel all the way up, and they split the range. This is the range, this is the high, that is the low, that is a range, okay? They break out and they split it by consolidating and pushing down, jamming down into the top of this box. The top of that box then becomes the bottom of that box, and we have a consolidation under a level. Okay, this is the opening range / initial balance high for the current week. We're consolidating under that level. We've had 3 pushes, 1, 2, sideways, 3, down, back into the bottom of that box. Obviously, in hindsight, you can see the rip to the upside, but this was non-farm payrolls. They ripped to the upside. A inside bar on the 15-minute chart. I'm going to delete all this. Inside bar on the 15-minute chart. Only a couple things those inside bars can do. If you have an inside bar, they can break to the downside to trap people underneath and then rip to the upside, giving you a measured move of that inside bar. Or it can just, break out to the upside and continue to trend, and that would be, again, a measured move of that inside bar. So this case, they just broke out to the upside of that inside bar and continued the trend. This could be considered like a rally-based rally. Whatever the heck you want to call it, it's just inside bar continuation style of trade. Now you can also look at currency pairs. This is US dollar, Japanese yen on the 15-minute chart. And we have a breakout that has failed at the high of the current week, giving us day 1 3-day cycle. This opening range high, opening range low, we have an opening range breakout on Tuesday, which gives us our initial balance low. They stop hunt low, creating a lower low and giving you a first mouse scenario. Market breaks down. It continues to break down, so that gives us further information for the week. Day 3, we've continued to trend lower, which means this is going to turn into day 1 of the 3-day cycle. Thursday is going to be day 2 in the 3-day cycle, which means I'm looking to sell at the high of the current day. Notice the 3 peak pattern, 1, 2, 3, to the high of the day. They break structure to the downside and continue that move down. But what does this give us for the weekly template? We have peak formation low, peak formation high. They continue to break out to the downside. The good pattern, the setup that you're looking for, is 3 pushes out of the opening range and a consolidation at the low of the week. So this is our first push out, our second push out, and our third push out of the opening range. Notice the consolidation at the low of the current week. They break structure to the upside, and the rest is history. There is the ascending triangle at the low of the week after a large consolidation, breakout pullback, and engulfment right at 9:30 for the parabolic trend trade, short squeeze back up. The short squeeze obviously was down here at the lows, and then the parabolic trend trade with the little channel, something like this, for the continuation back up towards Thursday's high. What I'm trying to get at is that Wednesday and Friday can only do 3 things. The first thing, and the most boring thing, is they can just stay in a trading range. They can stay as an inside day, not hit previous day's high or low, and do nothing, which means you would just either not trade or look elsewhere. But they can also give you parabolic trend trades or capitulation style trend trades, depending on if it's a long squeeze or a short squeeze. They can present as a short squeeze or a parabolic capitulation style of trade. All of the criteria for those styles of trades are in my past videos for the short squeeze, as well as the long squeeze and the parabolic trend trades. Or they can give you a false break reversal from the high or low of the week and give you a large scale reversal trade, such as I have here. And I already showed you this example, but this is the first push, second push, third push. This is gold. We have the parabolic trend trade on Wednesday and the capitulation style of reversal on that Friday. This is another example of a high of week long squeeze reversal. We have Monday, Tuesday, Wednesday blow off in the direction of the trend. And then you have Friday with trap volume, break in structure, and then on Friday, capitulation to the downside. Except in this example, notice that they have only gone back down to the 50% level of the week's range. If you are looking for every time the indicator says to buy, then you buy, or like EMA's crossing, that means to buy or sell kind of strategy, this is not for you. This just isn't for you. And in my opinion, that's not how you trade. This is a way of actually truly understanding the market and understanding that Wednesdays, everything is calculated, planned, and designed by the market maker to get you to behave a certain way, because this is what works. This is the model that works for the market. This is how they make money. Here's an example of a low of week short squeeze. Here's Monday, we have 300 pips of drop. We broke out of the opening range for the week, and we've sat down here, 1 push, 2 push, break in structure to the upside, consolidation on the inside. Here's the parabolic channel out of the low of the current week on a Thursday. So this trade didn't necessarily happen on Wednesday, but again, you have to use your brain. We have peak formation low, peak formation high, consolidation on the inside. The pattern still presents itself. Just because it didn't happen on Friday doesn't mean the pattern's not valid. But mainly, I am looking on Wednesdays and Fridays for the pattern to present itself. Same example that I've already shown you. Day 1, 3-day cycle. Day 2, 3-day cycle. This is gold from the last week. Peak formation low, peak formation high, consolidation on the inside. Breakout, rip to the upside on a Wednesday. This is exactly what you're looking for. Here is the same thing, except on a different week. Monday puts in the opening range high and low. We break out, false break reversal on Tuesday, giving us day 1, 3-day cycle. Day 2, 3-day cycle, I'm only looking for that long trend trade from the low of the day. They put in the same exact pattern as that last example I just showed you, except on a completely different week. Peak formation low, peak formation high, consolidation on the inside, rip to the upside, consolidation below a level. Of course, it reversed, but it doesn't matter. You've already got your 50 pips, 100 pips, however much it is, you're done for the day. That's your trade. You close it. You've made your money. On to the next. These are the trades. These are the patterns that you look for every single Wednesday and every single Friday. If you really focus in on those days, just understanding opening range and initial balance, 3 pushes within the week, the 3 levels of rise or fall within the week, understanding that where the volume is trapped, where are we consolidating, peak formation high, peak formation low. These are the trades that will grow your account fast or just allow you to make a living in general. Ladies and gentlemen, I hope that this video has been beneficial. If it has, do me a huge favor, hit the like button. If you're not subscribed, subscribe to the channel. You'll have a wonderful day and a wonderful trading week next week.